Okay, so today we're going to decode what is, according to Warren Buffett himself, the single most important book ever written on investing. Seriously, this isn't just some old book. It's the actual philosophy, the bedrock that built one of the greatest fortunes in history.
I mean, when you hear a quote like that from a guy like Buffett, you immediately think you know what this book is about, right? Your brain just kind of jumps to a conclusion.
You figure it's gotta be a book of secrets, a playbook for finding the next Amazon or Google. But here's the twist, and it's a big one. The real lesson is almost the exact opposite of that. And to really get why, we have to go back and understand the man who wrote it.
So just who was this Benjamin Graham? Well, his personal story isn't just some background detail. It's literally the key to unlocking his entire philosophy on investing.
See, Graham wasn't some academic just writing theories. Nope. He was a real Wall Street investor who got pretty much wiped out in the Great Depression. He felt that catastrophic failure, that pain, firsthand. And that one event, well, it changed everything for him.
After that crash in '29, Graham became absolutely obsessed with a question that most people who play the market just ignore. And that question was, how do I make sure I never get destroyed like that again? His whole game plan shifted. It wasn't about chasing huge gains anymore. It was about relentlessly protecting what he had.
And his most famous student, Warren Buffett, boiled this whole idea down into these two simple, legendary rules. This isn't about being scared or timid. It's about a deep understanding that if you can just avoid those huge, permanent losses, the gains will eventually take care of themselves.
And this obsession with safety, with not losing, it leads us to the single most important idea in the entire book, understanding the massive difference between being a true investor and being a speculator.
This right here draws a line in the sand. Look at the left side. An investor bases their decisions on thorough analysis. Their goal is safety. Their expected return is adequate and sustainable. Now look at the right. A speculator runs on excitement and momentum. They're chasing hot tips, hoping for some extraordinary lottery ticket return. And Graham's big and kind of scary argument? Most people who think they are investing are actually, without knowing it, speculating over on the right.
And this is his exact definition. It's not a guideline, it's a rule. It's a bright line. If what you're doing doesn't check all three of these boxes, analysis, safety, and an adequate return, then what you're doing is speculation, period. No gray area.
Okay, so how do you actually do this? How do you make sure you stay on the investor side of that line? Well, Graham gives us three very clear traits to live by.
It really comes down to this system. First, you have to remember you're not buying a little ticker symbol that bounces around on a screen. You're buying a piece of a real business. You have to analyze its health. Second, your main job is not to get rich quick. It's to not get poor quick. And third, you have to completely give up the idea of hitting the jackpot, because chasing those crazy returns is almost always what leads to disaster. Now, you might be thinking, this book was written in 1949. That was ages ago. So why are we even talking about it? Why does a guy like Buffett still say it's the most important book? Because the enemy it was written to defeat has never gone away.
Just look at this timeline of madness. Graham's own crash in 1929, the dot-com bubble in 2000, the financial crisis in '08, right up to the meme stock frenzy we just saw. The details change, but the story is exactly the same. In every single one of these cycles, millions of people make the exact same emotional mistakes.
That's the key right there. The stocks change, the apps we use on our phones change, but the human beings behind it all, they don't. The emotions that drive the market, the greed, the fear, the panic, the feeling that you're missing out, they are exactly the same today as they were 100 years ago.
And all of this, it all leads to the final, and honestly, the most important lesson in this entire philosophy. It's about finally identifying where the real danger in the market comes from.
This is such a huge mental shift. Graham is saying that being intelligent in the market has almost nothing to do with your IQ score. It's not about being a genius. It's about having emotional discipline. It's about having a system that stops your own human instincts from wrecking your portfolio.
And that's really what it all boils down to. The intelligent investor is not a get-rich-quick guide. It's an operating system for your brain. It's a shield designed to protect you from the single biggest enemy you will ever face in the market, which is the person you see in the mirror every morning. So the final question the book leaves us with is this. The market is absolutely going to test you. Sooner or later, it always does. And when the pressure's on and fear and greed are screaming in your ear, which one are you going to be? An investor or a speculator?